And we've seen a bit of volatility on the markets this week. It looks like markets are now looking for something a bit more convincing if they are going to continue this upward run that we've seen since March. What are we looking for here?
Stephen, your contention that the market is keenly priced, the words we used in the office today was, it's priced for perfection. Literally, some economic data coming out, and if it's slightly to the upside, the market is disappointed by that, as we saw with some of the ISM numbers coming out today, and then putting some pressure, like for example on the S&P 500, coming right off on the back of the ISM numbers that came out later this afternoon. With regards to volatility, obviously that's a very keen indicator that the market is looking for some very, very positive news, but we're not seeing that at the moment.
Well, we have had some analysts saying that the market is also ripe for a correction. Do you think we're going to see a correction in this market, and if so, to what extent?
Stephen, we're getting this question quite a bit, and critically what we're looking for is every time the market gets to sort of the 25,000 point level on the all-share index, it retraces back. Having said that, big resistance at the 24,000 point level on the all-share. If we continue sort of in a sideways drift, we could target the 27,000 point level. Personally, I'd like to see us with a nice strong correction, maybe going even as low as 22,000, just for the market to take a bit of a breather. It always helps to, get that edginess out of the market. But what we're seeing is on the pullbacks, clients and investors coming back into the market almost scared that they might be missing a buying opportunity.
Okay, so you're looking at perhaps just a correction of just over 10%, perhaps, if we do have one, which you'd welcome that?
Yeah, absolutely. It wouldn't be a complete train smash.
Just taking a look at some results we had out today, and of course Sanlam, the big one that we were all expecting, and much better than expected, it would appear on the face of it, considering, well, if you compare them to perhaps Metropolitan and Liberty's results, which were out last month.
Correct, yeah. Metropolitan was a really good set of results. Sanlam, in certain instances, they disappointed the BJM forecasts in certain respects. Has run really hard. It is one of the stalwarts in the insurance sector, obviously not being as exposed to the global financial crisis as their international peers have been. And as a result, Sanlam at just over 20 Rand is slightly overvalued. Our target price is sort of in the high teens, and as a result, we are calling it an underperform at the moment.
Where did the results disappoint?
If you look at some of the new business and lapse ratios that they reported, but I mean, it was an internal disappointment compared to where we were expecting them to be.
But of course, they really got it right in the investment portfolio side this time, didn't they? And that's something that Liberty didn't manage.
100%. Liberty had placed hedges in the book, which the timing weren't exactly ideal. When you place it.
Well, I mean, as you said, the share price around 20 Rand, I mean, it's really outperformed Old Mutual. If you think back to when both of those groups demutualized, it's really done well.
It has, yeah. I mean, Sanlam is just a much more focused business. They haven't had any of the balance sheet issues that we've seen in the likes of a Mutual. And so, yeah, it has been one of our preferred picks, but it has run a bit too hard. At the moment, we saw Discovery come up with results yesterday. And at the moment, Discovery is our top pick in the insurance sector.
Well, just looking at the gold stocks, and they were the chief performers today, up by almost 5% last time I looked. Of course, on Monday, they did take a bit of a setback, and that was due to Anglo Gold falling so sharply. Up 5% today. Which stocks have you been looking at in the gold sector?
Gold sector, actually, today's been the flavour of the day, so to speak. We were up 5% for pretty much from opening bell. And insofar as volume leader is concerned, Goldfields ahead of the pack, close on 9% of the market, and we had a decent day volume-wise, just short of 11 billion Rand crossing in trade. Short on its heels, if you looked at Anglo Gold and Harmony. So basically, investors ignoring strong Rand, which we saw on the back of the slightly better than expected GDP data, which was, the current account data that came out, and investors following the gold price blindly and paying up for gold shares.